This portion of the business, this technical, is just at a nascent stage today in the country. So the way it can grow exponentially over the next couple of years, and this is what we imagine it will happen. See, the biggest advantage I would say to the customer is that we are going to be their just-in-time supplier. I mean, like some of the customers sometimes jokingly tell me they're waiting for us to come. They said, you are our local Swiggy.
Reliance, IOCL, Gale.
Yeah, Haldia Petrochemical. Many other suppliers around the world.
Yeah.
So currently we import 50% of our raw materials and we buy 50% domestically.
Yes.
And this mix changes every year depending on the strategy, the pricing and the availability.
But you're saying that going forward, the raw material prices can come down?
So currently in Silvassa, in the polyester segment, we have about 550 tons per day.
Okay.
The Punjab facility in phase 1, we will be running about 700 tons per day, starting with a smaller capacity and then phasing it up in about 2-3 months. And the phase 2, we'll have another additional 250 tons per day, taking us up totally, Silvassa and Punjab together, taking us to 1500 tons per day, roughly, of polyester filament yarn. So I think over the next 3 years, what we target to do and hope to do is take our 550 tons per day capacity to almost 1500 tons per day. That's 3 times.
Like you're literally doubling your capacity. After the Punjab plant, what is your revenues potential you can achieve in FY26? I understand there is a slight area that you've given for technical textiles as well. And this new plant is coming up in Punjab. So my first question is, out of all the 28 states in India, why choose a state which is economically probably the weakest? Today, we are with a 3,000 crore market cap company, Sanathan Textiles. This company manufactures yarn. Yarn is the most basic and essential element that goes into clothing. And yarn is first converted to fabric, fabric into garments, and so on and so forth. But this company is not just into yarn for clothing. The yarn is used everywhere, from the seatbelt of an aircraft to airbags in an automobile. What makes this company interesting is that they are doubling the capacity starting from Q1 of FY26, which the company says can improve their revenues tremendously. Let's find out more about it, about the products, the issues in the industry, more about the PLI scheme from the first generation and second generation promoters of the company, Mr. Paresh and Samir Bhutani. Thank you for being on the series.
Hi.
First, to get the basic elements right before we move on, I understand you are into manufacturing yarn. What are the 3 or 4 categories, types of yarn that you manufacture?
We have 3 verticals in our manufacturing of yarns. The biggest segment is the polyester filament yarns, and then we manufacture cotton yarns, combed cotton yarns, and we also manufacture yarns for technical textiles.
Okay.
So these are the 3 basic 3 types of yarns that we manufacture.
Okay. Samir, like what percentage of revenues comes from each of these 3 categories?
So currently polyester filament yarn is the largest contributor to the revenue, about 77-78%. Cotton being the second at about 18-19%, and yarns for technical textile, the youngest and the smallest division at the moment, contributes to 5%. But let me add, that's the most exciting space.
Yeah, technical textiles, India is very young in that space, and technical textiles is being used in a various of applications. We'll come more onto that later.
Right.
But first, I want to understand, why did you get into yarn? What made you come into this business? You're not a small company. You're probably one of the largest companies we are interviewing. So that journey, that 3,700 crore market cap, 4,000 crore market cap, it was not done in a year or 2. So what was your initial days?
So as a family, we have always been into yarns. So for 75 years, we've been into the yarn facility. And we have been trading into yarns, different sorts of yarns. So we got exposure to all the varieties of yarns that were being used in the segments. In 1993, we decided to get into manufacturing. We started with a very meager capacity of about 4,500 tons per annum.
Okay.
Which today we have moved up to 2,25,000 tons per annum.
Okay.
And Sanathan, of course, was incorporated in 2005 because we had a different company doing that. But post 2005, it's all got amalgamated into one business. So this is the only business we do and the only company that we run. And at Sanathan, over the last 20 years, we've grown at a CAGR of about 22-23%.
Okay. For putting up this 4,000 tons per annum capacity, where did you get that capital from? What made you think, okay, let's go into yarn, let's set up a capacity? What was that moment?
Yeah, so as I said, we were always into yarn. So we were trading, and we always had this thing that we need to get into manufacturing. It was around the 92, 93 that we got an opportunity, and we started our first plant with a small capacity at Daman.
Okay.
And that was a filament yarn, but we were doing only a one-step process at that time.
Understood.
So we used to buy POI and convert it into yarn and market that yarn. That was the first venture into getting manufacturing. That's how we moved from there. And then, as I told you, we incorporated Sanathan in 2005. Then we grew backward over there. We went into spinning of the POI, which we were buying from outside, but that was through a chip-based route.
Okay.
We further grew backward and then set up our own polymerization plant. So we were fully integrated, where we buy raw petrochemicals like PTA and MEG and do the entire processing right up to the finished stage of the yarn.
Understood.
So that has moved from 4,500 tons from annum to today 2,25,000 tons over the last 25 years.
And eventually with better margins because you were backward integrating throughout?
Yes, better margins also, and I would put it this way, that it gives you a better margin. It gives you today world across, and in India also, you see only those companies are there in the business where they are fully integrated.
Yes.
So if you need to survive and manufacture properly, because you get a better product,
Yeah.
you produce it more efficiently, and you have a better margin. So that's the reason to get fully integrated.
Absolutely. Samir, like coming into the business, and you said polyester yarn is the majority of your revenues.
That's
So
right.
let's talk about the polyester yarn. How much, like, what are the main raw materials that is used in this process? Because I understand there's a China factor and there's a lot of crude oil factor. So what are the main raw materials here?
So for polyester, our main raw materials are PTA and MEG, and
Explain, what is that full form?
purified tetraphthalic acid and
Okay.
monoethylene glycol.
Okay.
And that's the base, the main petrochemicals required to make the base polyester.
Okay.
At Sanathan, we are fully integrated. So after making our base raw material polyester, we spin our own base yarns and do further value addition, texturizing, twisting on our base yarns.
Got it. Got it.
India has enough manufacturing capacity for PTA and MEG, but after the growth in demand, today we're short of PTA.
Okay.
So we import PTA into the country, but within the next 12 months, there are 2 new facilities of PTA coming up in the country. GAIL is setting up one in Bangalore, and Indian Oil is setting up a new facility in Paradeep.
Okay.
After that, as a country, we'll again be net positive in PTA availability.
Okay. So you're buying from these petrochemical companies, the PTA, that is terephthalic acid, and
The
glycol.
monoethylene glycol, yes.
Glycol. You're buying it from petrochemical companies like Reliance, IOCL, GAIL.
Yeah, Haldia Petrochemical.
Okay. And
Many other suppliers around the world.
Yeah.
So currently we import 50% of our raw materials and we buy 50% domestically.
Yes.
And this mix changes every year depending on the strategy, the pricing and the availability.
Okay. Okay. But you're saying that going forward, the raw material prices can come down because India is manufacturing that in the land.
Definitely, right? When the supply will increase, we will become far more competitive to international pricing like China in the coming months.
In your con call, it is mentioned that China is able to sell exactly what you sell, the yarn, at a lower price, despite having the same manufacturing cost, because their raw material prices are much cheaper over there. So with this GAIL facility and the IOCL facility, you're saying that instead of us becoming a net importer of these raw materials, we would probably become a net exporter, if not self-sustaining.
Definitely. So we'll definitely become self-sustaining,
Yeah.
maybe a net exporter, and that will definitely improve our raw material pricing and make it more competitive.
Okay, great. Now I want to talk about the end user segment. See, when I studied about polyester yarn, it's being used everywhere from clothes to something in seatbelt of aircrafts to airbags in an automobile. So who are your end customers? I understand most of your revenues come from India, but I'm sure those companies would be exporting that to the US or the EU, and that is being used in several other applications. So I want to understand, what are the main industries that you supply to?
So textile has gone through a very exciting transition, and textile is no longer about clothing. Textile goes beyond clothing now.
Yes.
And you rightly said that today our yarn products are used in many applications and industries and products that are used by you and me.
Yeah.
Right from your apparels and garments, which is the most obvious. There's home textiles and furnishing. There's automotive fabrics. There's fabrics for seat belts, construction fabrics. Geogrid is used for construction of roads and dams. So many end user applications. The yarns that we produce at Sanathan are used by you and me every day, everywhere. Think about it.
Yes.
Everything that we touch today has some form of textile to it. And that's the exciting part of the textile business. And at Sanathan, at Silvassa, we grew scale and we made a business setup where we had a wide variety of products. And now we're taking the similar ethos to Punjab, to our new facility, where we will be going closer to the customer.
Stop. Before you invest another rupee, ask yourself this. When is the last time you heard the story behind your investments? We are Green Portfolio, an asset management firm that manages north of 1,000 crores in assets. While tracking companies, while researching before we invest, it's not that we just track these companies' financial reports and quarterly statements. Rather, we visit their premises, speak to them one on one, visit their factories, and get to know all the ins and outs of the company even before we invest in them. But here's what we realized. If our research gives us the capability to build our portfolios, why don't retail investors have the same access? This is why we created Green Sharks. Green Sharks gives retail investors the capability to be indirectly in the room with the promoters and ask tough questions. We are not talking about the usual suspects. We are not chasing mainstream stories, nor are we chasing generic chit chats with the management. We are chasing small and mid cap companies that are hidden in plain sight and can be big opportunities. And now you're not just watching, you're participating. Submit your questions before each interview, get early access to each episode, join our Green Sharks community now. The link can be found in the description below. In fact, this isn't just another podcast. This is your research team getting you in the room with promoters of the companies you want to invest in. So, welcome to Green Sharks, an investor's edge in stock research. I want to talk more about the facility. So, you must have seen, since you're the first generation, you would have seen this yarn industry evolve. Like the applications where we're using yarn right now is not what it was being used 20 years ago. So, how has the journey been? Like your end user customers, how has it evolved over these years?
It's evolved a lot. If you go back 20 years or 15 years back, what India was making, not only in fabric or not only in garments, but also the basic yarns, we were all making a few varieties of basic quality of yarns.
Right.
And most of us were doing one process or two processes. Today, as we stand today, the 7, 8, 9, 10 of us are fully integrated. So that takes the advantage, what the international people are also enjoying. And as far as your question regarding the product change, yes, because of the basic raw materials, we were just making the basic fabric required for a few end users.
Mm-hmm.
From that, it has moved. I mean, I'll give you a classic example. If you look at the zips, the zip manufacturers, earlier on, I've seen the cloth around the fabric around the zips were all cotton.
Okay.
Today, it is all filament yarn.
Oh, okay.
The labels, which is a huge industry also, it was all cotton earlier. It is all filament yarn today.
Okay.
So, I mean, the things have evolved in such a vast way that, I mean, if you'd honestly, you'd ask me 20 years back, would it change this way? Even I wouldn't have imagined it.
Now, next 20 years, what do you think is going to evolve more? Is technical textiles going to be the next big thing in textiles?
Definitely. I think technical textiles is the future. And at Sanathan, we are quite geared up for that. There are a handful of yarn manufacturers for technical textile application. And this domain, this segment requires a lot of focus on quality, on stringent checks, certifications, because the kind of application that the yarns for technical textile is used is very exciting and very varied. Right from geogrid fabric used for construction of roads and dams to nets used for aquaculture, deep sea fishing.
Yeah.
There are ropes used for safety and marine applications. There are seatbelt fabrics, airbag fabrics, and also other new exciting end uses like defense fabrics, bulletproof jackets, fire retardant fabrics. So lots of new applications that this segment is discovering. And I think this is definitely the future in the coming years.
And I would also like to add to what he's saying that this portion of the business, this technically, it's just at its nascent stage today in the country.
Yes.
So the way it can grow exponentially over the next couple of years, and this is what we imagine it will happen.
In the country or just globally? Because 21% of the value of the entire textile is technical textile, which is still very less compared to the applications it has, the technical textiles.
Yes, but when you look at that portion to our country, I mean, we are just in single digit numbers.
Absolutely.
So that's why I said that in this country, we have a huge scope to get onto that part of it, which I see over the next couple of years actually panning out.
seat belts, for example, that polyester that's used in manufacturing that seat belts in an aircraft that can hold up to 2000 kgs.
That's right.
So that is all about chemically treating that polyester and all about the yarn process, right?
Also,
Yeah.
the tenacity, the technical properties of the yarn, or the polyester, the base raw material that have been modified to make sure that it gives all those qualities to the end product.
Exactly. And I'm sure that it's not a 2%, 5% margin kind of polyester that they manufacture to supply to the
That's right.
industry.
It's far more
That's
value
far
added.
more
Yes.
value added.
Exactly. Because you said value adding, I read on a con call that you're going into some value addition. I don't know about your research and development cost or anything of that sort because there is no annual report yet. It's all DRSP. So we'll come to that. This new plant that you're putting, I understand there is a slight area that you've given for technical textiles as well. And this new plant is coming up in Punjab. So my first question is, out of all the 28 states in India, why choose a state which is economically probably the weakest to set up your new manufacturing unit?
See, we decided to go closer to the customer. That was the whole idea of the ethos of going up north. Today, as we stand, everything that is produced in filament yarn in the country is produced on the western side of the country.
Okay.
Okay, and there's a huge 1 million ton market up there. So when we decided to go to Punjab, we looked at all the other states too. But Punjab being the best in terms of location, in far as centrally located for these 5 principal markets.
Okay.
So where we stand out there today is that within 150-60 kilometer radius, we have access to all 5 markets.
Which
That's
are those
one.
5 markets?
It's Panipat, Delhi, NCR, Amritsar, Ludhiana.
Okay.
So if we cover a radius of 160 kilometers, we have covered it all. And so we are the closest, we are going up closer to the customer, we are bringing their raw material at their doorstep.
Understood. So it's like you would save on freight cost. Besides that, is there any benefit?
Yes, we'll have a freight advantage there because the biggest advantage I would say to the customer is that we are going to be their just-in-time supplier.
Understood.
I mean, like some of the customers sometimes jokingly tell me they're waiting for us to come. They said, you are our local Swiggy. So because they order and within 3 hours, today they have to wait for 7 days for the material to reach them.
Okay.
You know, for the last 2 decades, they've been used to buying their raw material with a 5 to 7 day delivery time.
Okay.
And in today's day and age, you know how it is with Blinkit and Swiggy and Zomato, you're used to instant everything. And that's what we're hoping to bring to our customers. And these people have been our customers for more than a decade. We've been supplying from the Silvassa facility.
For them also, it's a new thing because they've been used to this thing that you order today, it'll come after 8 days, 7 days, 10 days, and they have been used to that sort of a cycle. Today, they are looking forward to it because it's going to be available to them in a few hours.
Okay. But in the manufacturing area, people usually do the order booking 1 year prior. It's not like Swiggy, Zomato in the manufacturing sector. So does your business evolve on a 15-day, 2-week window basis? Or even
yes, it does. See,
Okay.
it's like this. Somebody can place an order with you for maybe 2 months.
Okay.
He gives you a visibility of what all he'll require for 2 months.
Okay.
But the pricing is never fixed for 2 months.
Understood.
The pricing is always done, let's say people normally fix it for about 2 weeks.
Okay. So this is not like an order book type of business?
No.
Yeah. Okay. So it's a very short notice kind of order delivery
That's
that
right.
you deal with.
That's right.
Okay. And Punjab puts you in that place where it's cost advantageous and close to the customers.
Yeah, because Punjab inherently gives us a cost advantage in terms of the OPEX.
Okay.
And we have that freight advantage, as you mentioned, that's a huge advantage going closer to the customer.
Okay. Then these 5 markets, what percentage of your revenues comes from that 5 markets?
As we stand today?
Yes.
As we stand today, of the filament yarn capacity, let's say about 20% we sell there today.
Yeah. Okay. Okay.
But having said that, let me tell you, it's not what we sell to them today. Because what we are setting up there is hardly about 20% or 25% of the total consumption there today.
Okay.
So the balance consumption will still be coming from the West.
Good. Understood. And somewhere it was mentioned that the freight cost, usually they pay like 5,000, 6,000 rupees.
Yeah, 5,000 rupees.
Per ton, if I'm not wrong.
That's right.
But now it's going to reduce to 1,000, 2,000 because you're putting a plant there?
Yeah. So what we will be supplying will cost us maximum 800 to 1,000 rupees a ton.
Okay.
What they are used to paying today is about 4,500 to 5,000 rupees a ton.
Okay.
So there's a huge delta of almost 3,500, 4,000 rupees a ton there.
Okay. Got it. Now, Samir, the Punjab plant, you already have a Silvassa plant. and now you're putting a Punjab plant.
Mhm.
Silvassa, what is the current capacity, not utilization, capacity? Now, with the Punjab unit, whatever phases you're doing it in, what would be the combined capacity after phase one of Punjab plant?
So currently in Silvassa, in the polyester segment, we have about 550 tons per day.
Okay,
The Punjab facility in phase one, we will be running about 700 tons per day,
okay,
starting with a smaller capacity and then phasing it up in about 2-3 months.
okay,
And the phase two, we'll have another additional 250 tons per day, taking us up totally, Silvassa and Punjab put together, taking us to 1500 tons per day, roughly, of polyester filament yarn. So I think over the next 3 years, what we target to do and hope to do is take our 550 tons per day capacity to almost 1500 tons per day. That's 3 times.
okay, 3 times in 3 years.
That's right.
So you're currently at 500 plus 700 that will come from the Punjab plant.
Phase
First
one,
phase,
phase
and
one.
250 will be in the second phase.
Okay, so in FY26, you would have a capacity of 1200 tons, 500 plus 700?
Yes, but we will be utilizing only 60% of the Punjab facility since we'll be starting up soon,
Got it.
and we'll get about 60% of the production and the revenue.
60% of production because lack of demand or the
No,
eventual...
for the financial year.
Yeah.
Because we've lost first quarter, no? Before
Yes.
till we could start up.
Yes, so but that's like 25% of the revenues?
Roughly. And it will start up in a phase manner
Right. Yes. So when are you starting that plant?
very soon. Coming up very soon.
Okay.
Just round the corner.
Yeah.
Okay. In quarter one of FY26?
Yes, more or less.
Towards the yeah.
Because this is a huge capex.
Yeah.
Like you're literally doubling your capacity.
More than doubling.
And you're not a small company, like a
That's
100
right.
crore, 200 crore market cap company. That there we expect, they'll ramp up quickly. But you're a...
See, there I would like to just, give you a little bit of a gist on that. When you set up a manufacturing, your challenge is, locating the place, setting it up, getting the equipment, getting the best equipment in the world. We have gone through all that. Then comes the challenge of actually getting the buildings up and ready and the equipment erected. We have gone through that. It's all done.
Okay.
So we are all there. So I don't see that. Now the other challenge that comes is you're more than doubling your capacity where you're going to sell the material.
Yes.
But in our case, that is not there because as I said, what we are setting is about 20% of what is consumed there today.
Okay.
And we being the local supplier, your material is placed from day one.
Okay.
We don't need to really go out and sell. It's placed from day one.
Okay. So that means currently 20% is currently being supplied in that region itself. So for the 80% that they're currently consuming, your customers, they used to rely on the Western states.
They will still have to rely on the Western states.
Yes, yes. But
so you look at it effectively, I'll give you another part to it. 20% of the customers only will get benefit of the advantage of us being there.
Right.
The 80% will still have to rely on Silvassa supplies.
Okay.
In terms of working capital, in terms of time, in terms of pricing, whatever.
Okay. So are you going to displace your competitors or are you going to displace the capacity utilization in the current Silvassa plant?
We are going to we are going to take up about 20% of what is consumed there. That market is growing at an annual rate of about 4 to 5% CAGR growth. So, of that 1 million ton in the next 3-4 years, whatever you're putting up is all going to be exhausted as it is. So, we will need more material from Silvassa post that. Having said that, today, whatever we are supplying, we have multiple options. If we feel the netback on pricing and margins are better and we can supply from Silvassa, we continue. Or else we place the material elsewhere. We can do it on the western side of the country, we can do it in the southern part of the country, or we can do it on the export front.
Got it.
Wherever the better netbacks are there to us.
Got it.
The good thing is we don't need to displace anybody because the kind of growth we're seeing in downstream. It's polyester filament yarn in India is roughly about a 4.4 million ton market currently and growing at about 4 to 6%. So I think the incremental demand will take care of the new production that we're setting up over the next 1.5 years.
And to be very honest, the idea was not to go there and disturb the market. We were not trying to disturb a market. We were trying to go closer to the customer, give them the experience of today's world where everything needs to be just in time.
Yeah.
And give them a better cost advantage on that.
Okay.
And give us a better margin going forward.
And what is the current capacity utilization of the Silvassa plant right now?
Silvassa, we always operate more than 95% capacity. Always.
Yes. Because in your DRH videos mentioned 110% for polyester yarn.
Yeah, see, that also depends on what like let's say our polymerization capacity, our nameplate capacity is 450 tons.
Yes.
But we have debottled that, and today we are operating at 525 tons.
Okay.
So that's why we say 110%. But today we look at that 520 ton as our base capacity.
Got it.
So there we are operating at about 95%. We look at it that way.
Okay. Samir, in chemical industry, if the US generic market is suffering or there is some regulation, then the Indian pharmas suffer, like CDMO segment or other segments in the pharma.
Right.
And whether it is chemicals also, when there is a slowdown in the economy, when the paints are not selling or polymers are not selling, there is a slowdown in the Indian chemical manufacturing as well. Okay, in your sector, what is the largest risk that you see? Not just sector, for your company as well.
So geopolitical issues definitely affect us. It affects demand, it affects pricing, it creates volatility in the market. That can be one of the challenges that can happen and has happened in the recent past. But one of the beauties of our business model is that because we make yarns for many industries and applications, other kind of demand variations or cyclical demands, we're able to mitigate very easily.
Okay. But if you were to name that one thing, it cannot be geopolitical. What is that? Narrow it down further. What is that risk that you?
I think price volatility.
Price volatility.
Too much of price volatility in a short window does disrupt things a little bit.
Okay. Like I've seen your FY 21, 22, 23, 24 financial results, and in that, even though the revenues are more or less stagnant, the problem is the margins that keeps fluctuating.
See, FY 21 and 22 also was a very unique year for many industries because it was the post-COVID pent-up demand phase. I think a lot of industries and sectors went through a very high demand after everything opened up. So I think that's a little bit of a unique year. But otherwise, if you go backwards in history, and if you take a 3-year average, a 5-year average, or even a 7-year average, our margin profile at the Silvassa facility has largely been at about 10-10.5% EBITDA margins.
Okay.
And I think that will continue to sustain. Maybe improve in the coming years is what we think. And the fair way to look at our business is over a 3-year average, because there will be phases, on a quarterly or a yearly basis where it could be a bit higher, a bit lower. That's the nature of the business, of any business, I think. But over a 3-year period, it all averages out.
Okay, got it. Now, because you touched on the margins, I want to ask you, after the Punjab plant, what is your revenues potential you can achieve in FY26?
So FY26, because we will get only about 60% of the installed capacity production after startup, we should get an additional revenue of about 15 to 1600 crores from the Punjab facility. Silvassa will continue to run at the 95-96% full capacity utilization. So the total company revenue should be at about 45-4600 crores.
Okay, that's like 3000 from what you did in FY25 plus another 1500-1600 that you can do from the new plant.
That's right. FY27, we'll get the full year of running of Punjab.
Understood.
So we should get much more, close to 6.
And the industrial.
Yarn
for technical
which we're going to be
doubling, which will hit FY24.
What do you mean by industrial? Technical
textile.
So we are doubling that capacity also, which will come in by FY27.
Okay.
So 27 we'll get 6,000 crore plus top line.
Okay. Is that what you're calling the phase 2?
No.
Okay. As a resounding no. But
the phase 2 is when we move the Punjab from 700 to 940, 950.
Okay.
Phase 2 is for the polyester filament.
Polyester. Okay. Now, coming to the margins, if with this new plant, you'll be doing 10%, 11% EBITDA margin, I suppose?
At a consolidated level, yes.
Okay.
Punjab, like Parishbhai mentioned, has a lot of locational advantages as well as operational cost advantages. So Punjab standalone, we're hoping to do at least 4 to 5% higher EBITDA margins compared to the polyester facility in Silvassa.
Okay.
And at a blended level, we are hoping definitely to do around 11-12% on a long-term 3-year, 5-year average. Also, let me add here that at the Punjab facility, it's in a 100% subsidiary. So we also have a corporate tax advantage where the Punjab facility will be paying a base corporate tax rate of 15% versus the 25% in Silvassa.
Okay, so the average weighted tax rate will
also be much lower.
Okay. Then what about your interest? EBITDA we talked about. Now interest, because your debt is like 1,050 crores because you've taken debt for the Punjab plant. Okay, how much is your interest cost per year that you forecast?
So I think we should have an interest cost. See, as far as the first, let me tell you about the cash flows, because the repayment part of it in the out of the primary issue that we did, we have repaid 300 crores of debt.
Okay.
So we have paid 160 crore for the Silvassa plant,
Okay.
and 140 crores we have prepaid installments of the current debt.
Okay.
So the new debt for the Punjab was 1300. We have paid our installments for almost 3 years there.
Yeah.
So we don't need to repay anything. We only need to pay the interest for that.
Okay.
So that gives us a healthy cash flow situation over the next 2.5, 3 years.
Okay.
Coming to your question about the interest cost, yes, we will be servicing an interest of close to about 80-90 crores a year.
Okay. That is after taking into consideration
Yes,
what you said.
yes.
Okay. So 80 crores there, then of course depreciation is there, and depreciation would be very high because this plant is just starting.
Yeah, this plant is starting, but Silvassa is more or less depreciated.
Okay.
So averagely, we should all put together close to about 120 crore depreciation, maybe.
Okay.
Yeah.
Okay. Still, PAT margin then should slightly improve.
Yes, today we are close to about 5.5% of PAT, which we see going up to about 6.5-7% going forward.
Okay. See, I want to make oneself clear. I'm not invested in the company. Neither is anyone that I know. It's just that we are. This might, to audience, this might look staged, but only we know that we are discussing this.
Exactly.
candidly.
Yeah.
Yeah. But so I just want to make clear to the audience. Then can we go into the PLI scheme that we briefly spoke about before? PLI scheme, I personally feel it's a failure because only 14% of the allocation by the government is utilized and companies are actually gaining from it. Because there are sectors like steel, whether it is handset manufacturing, it's not doing that great in India in terms of PLI utilization. So what is your opinion on that?
In textile, the situation is a bit different. From what I'm reading the papers, almost 70-75% of the 10,600 crore PLI scheme has been subscribed.
Okay.
This year itself, the government will disperse about 1145 crores, and the balance amount, they will increase the disbursement every year and finish this 10,000 crores, out of which about 7,500 is subscribed to, over the next 5 years. So I think the response to the textile segment of the PLI scheme has been very positive, and I'm actually seeing that on the ground. I'm seeing customers expanding. I'm seeing the North India textile market expanding by 4 to 6%, whereas in the West, in Surat, I think in the short-term basis over the next 2-3 years, we are anticipating a growth of almost 7 to 8%.
Okay.
As far as technical textile is concerned, reports are indicating a growth of 15 to 17% in the coming years. Of course, the base is very small in India yet, but a tremendous growth.
Okay, so you're saying that the 10,600 crores that was allocated to technical man-made fiber sector,
right,
in the PLI scheme,
right,
that is being utilized well.
About 70-75% has been subscribed to already, from what I read.
Okay, and you're seeing like on-ground movements positively.
Definitely.
Okay. And do you think PLI is beneficial for the industry? Yes.
Of course, because the government also understands that, and what is different is this time the PLI is focused on man-made.
Yes.
In the past, there was a lot of focus on cotton. But now the government has also realized that moving ahead, the growth of textile will only come from man-made, and polyester filament yarn is the largest contributor to the man-made fibers.
Okay. Respectfully, why didn't you then take advantage of the PLI scheme and go for Punjab? Is it because you thought the logistics cost would overweigh the PLI benefits?
PLI is not for us, for yarn manufacturing.
Okay.
And it was consciously designed in a way that it encourages the fabric garment downstream manufacturers of the man-made.
So your customers can get benefit from
Absolutely.
PLI, but not you. So the debt levels, for a 3,700 crore company, you got like 1,000 crores. What do you plan to do with it? Do you plan to increase it further? Maybe utilize that for phase 2 of the Punjab plant, or do you plan to pay it down?
See, first things, the debt on that 3,000 crore top line that you're talking about is not there. This is negligible. This entire debt that we are talking about is for the Punjab plant, where we are still to get into the production. So, on the current facility of Silvassa, there is a very small negligible debt that is there now. Yes. So, this entire debt is for the new plant. Going forward, the cash flows are going to be very healthy. As I told you, we don't have any local bank payment for another 3 years, and we only need to service the interest. And I don't see any issues on the cash flows, and whatever expansions that we are going through, with the healthy cash flows, we should be able to. But if there is a necessity, we take a debt, we are open to that, because on the past, as a company, as a philosophy, we've always taken our debts judicially. We have always utilized it in the most beneficial way to the company, and we have always paid on time or prepaid our debts.
We see debt as a tool, and it's an important tool for a manufacturing company. And if you use it correctly, which we have done for the last so many years, it fuels growth and also pays back handsomely in terms of the returns that we get.
Okay. One thing I completely skipped my mind while coming for this interview. How much is your promoter holding?
Today we are holding about 78 points in percent.
78.
Yeah, 78 point something.
Isn't it supposed to be below 75?
No, we have 3 years for that.
Okay, yes.
Yeah.
Yes.
As per the
Recently
SEBI regulations, we have 3 years. We have liquidated only about 21% at this moment in time. The balance we will have to do it in the next. We have already 6 months through the IPO, so we have another 2 years at least before we sell off the balance.
This 400 crore that you raised in IPO, was this your first capital raise, or did you raise before as well?
No, this is the first capital raise.
So, because a lot of companies, what they do is they dilute 5%, 10%, get some private equity players
Yes,
or individual investors.
I understand what you're trying to say. We've had no private equity players. We have nobody, no other investment. It's a clear-cut family-held company, and what we have diluted 21% is from the family holding.
Okay. And do you have any other business interests other than this?
No, this is the only business we do and the only business we know.
Okay. Do you do any related party transactions here?
No, nothing at all. We don't have any related party transactions. We have no other company besides these.
Great.
Of course, Punjab is coming up in a subsidiary, which again is 100% owned by the parent company.
Yeah, that I can see.
Yeah.
That's great. And now coming to research and development. On the con call, see, I thought you were a very traditional player who just manufacture yarn, polyester yarn, procure the raw materials, manufacture and sell to the customers. But you're doing some R&D as well. I'm not quite sure, but it looks like you're doing some R&D, and there are new products that's being manufactured and marketed.
Yeah.
So you want to talk about it?
So, there's constant product innovation, product development that's required at our end. Like recently, we launched our range of stretch yarns. Now, if you notice, all the garments that we wear, the high street fashion garments from Zara or H&M, Pantaloon, etc., they all have a certain number of stretch to it.
Yes.
We launched our range of stretch yarns where either with the help of spandex or even self-stretch yarns where you don't need any spandex, we're able to give the stretch capabilities to the fabrics. We have moisture management yarns which are used heavily for sportswear, gym wear. They're used by all the big brands for the moisture management, water repellent kind of yarns. We do colored yarns with the help of dope dye technology where there's no conventional dyeing required. There's zero water pollution, there's far better color depth, and the yarn is born in the intended color. This takes us closer to the brands who are our end consumers because we're able to sort of give them the color of the season or the color of their collection right at the yarn stage and eliminating further processing of conventional dyeing. So a lot of such innovation has happened in the last decade in the yarn manufacturing business. And at Sanathan, we are always looking out for the next best opportunity. In a very small way, we just launched our range of recycled yarns as well. Now, it's a very nascent baby step that we have taken, and we think that there is still some time for this to become a big commercial segment for us. But we want to be there from the beginning and experience the journey in terms of demand, customer feedback, and what's going on in this space. So it's somewhere we are in sync with the consumer. Okay. If you see the kind of innovation that's happening around us, the kind of performance that you expect from a garment today, especially if you're talking of sportswear, gym wear, which is a very big and growing segment. So as a yarn manufacturer, which is the starting point of the textile chain, we have to be in sync with what the customer wants, what's happening at the ground, and constantly try and do R&D, try and do product innovation, try and do product improvements. So our team is not just focusing on new products, it's also seeing how we can improve efficiencies for the customer, how we can improve productivity for the customer, how we can improve the margins for the customer and for ourselves. So it's a mix of new products, improving product quality, innovation, speeds, etc., all of it.
Does the improvements and developments have a direct impact on your margins?
Definitely. All these products that I just touched upon, what we call them as our value-added products, definitely gives us a higher EBITDA margin compared to the conventional commodity products.
Okay. This is a very straightforward question. What is your mindset here? Okay, you'll do the capex, you'll increase your capacity, increase the revenues, profitability in terms of absolute value. Then what? Do you plan to go more into value-added segment and recycle PET? What is your vision there?
See, the idea at Sanathan is to keep growing, have growth for sure because the market is growing, the industry is growing, the demand is growing. Try and look at new opportunities where we can maximize returns on our capital investment, which any business should be looking at. Try and solve problem for the customer. Try and add value wherever we can for all our channel partners, whether it's efficient handling of the product, better efficiencies on our product, newer products, newer performance that we can bring to our yarns, new applications, because the applications are growing tremendously, like we spoke about earlier, especially in the technical textile segment. So we have a keen focus on all of this.
Okay. This is something I have not come across. This recycled polymer that you said, is this something like Ganesh Ecosphere or Rudra Ecovation is currently doing, that they recycle the plastic bottles and manufacture yarn out of it?
Similar, but we are not doing the recycling of the bottles ourselves. We are buying flakes that are already recycled.
Okay.
Most of the flakes come from the waste plastic bottles, but we are making polyester filament yarn
Okay.
from this.
What they are doing is more staple, polyester staple fiber.
Understood. No, I visited the plant of Rudra Ecovation. It was very interesting. They've got bales of plastic bottles crushed, and you see the entire factory.
The cleaning line is there, and
Yes.
The caps are completely gone into waste, but the other items, all the plastic bottles, are converted into fabric.
That's right.
And that's because the PET bottles that we use for water are made from the same base raw materials, PTA and MEG.
Yes. Polyethylene terephthalate is polyethylene terephthalate is plastic bottle, and terephthalate is what you use as raw material to manufacture.
It's the same. The PTA and MEG, the tetraphthalic acid and the glycol are exactly the same raw material for the PET bottles.
Okay. Thank you so much for taking the time. And this is my first time we're interviewing two people together. And it was a great experience. You both shared your thoughts wisely, and it was almost 50-50, which is great. And I wish you all the best. Thank you very much.
Thank you.
Thanks very much.